Thanks for joining us today. I'm Marlin Bohling with you, your tour guide to the ag commodities. And, well, I am joined in studio by a very special guest. He tends to pop in once in a while, and well, he did it again today. There he is, Chris Swift of Swift Trading here in Nashville. Good to have you on board here, sir.
Oh, it's a pleasure to be here.
Starting off the week on a kind of an exciting note here.
It is.
The grain market's really perking up here.
Yeah.
Even though they may be easing back here in the last few minutes of trade, come to think of it, I think it's when you walked in the door. But anyway,
maybe not.
We'll see what the market is doing right now. Let's go to the corn board. Let's take a look at what we're doing. On our quotes provided by Bar Chart, you have July corn. Well, we're still a dime higher, Chris, at $5.96 1/4. And December up 3, now up 4 at $5.12 3/4. Even though we have slid back off of our earlier high here by about 3.5 cents or so, but pretty good gains across the board. Now on soybeans, you have the nearbys leading the way higher here too. July is up 16 1/4 at $14.06 1/4. Had a low of 13.86 1/4. We're 20 cents off of that right now, and now we're within a nickel of our high. We have November soybeans, the new crop month, 7.5 higher at $12.31 1/4. That is also about a nickel from its high from the early morning trade. Now on the wheat in Chicago, it's getting after it. July now 22 higher at $6.57. There again, a nickel off of its earlier high. But you look through July, September, and December, they are all at least 20 cents higher. And the March and May of next year, not far behind. Kansas City wheat, you have July up 24.5 cents at 901 1/2. Look at that, Chris, a 9 handle. 901 1/2, had a high of 912 1/4 a little bit ago. And let's take a look at the Minneapolis spring wheat trade, see if it can keep up. It's given it the good old college try. You have July now 27 higher at 8.73 per bushel. Only one tick, just one lonely little tick off of its high of the day. And that's already 32 cents off of its earlier low. My goodness. Big moves in the wheat market today. Let's start there.
Okay.
All right. What do you read into that? Why is it doing this?
Well, variety is more than anything, because where they grow the hard red winter wheat there is in the most drought aspect. And I've heard you say a couple of times they're going to be doing the wheat tour this week. So I think there, and then of course in Minneapolis where they've had all the rainfall, they just saw they got a lot of rainfall, so that might inhibit some of the planting there. And Chicago lowly falling in behind there as everything else is a little bit stronger towards Minneapolis and KC, and Chicago just kind of taking up the rear right now.
Well, you have to admit the soft red wheat in the Midwest looks pretty good.
It does. Oh, absolutely. Everything outside of that little drought area looks really good.
Isn't it a weird dichotomy, though, where in the central and southern plains, it's overly dry, has been for a long time, and you go just a little north of there in the northern plains, and it's so wet they can't get in there to get it planted this year. And it's not that far apart,
It's not, and I think a lot of it is due to the El Nino changing. We are changing a major weather pattern, and it's going to continue to change for months. It's not just where it goes one week to the next. So it'll be an evolving weather pattern there, and eventually I think you'll get all of that Midwest area out of the drought. Big thing now is going to be pastures, to see how much rain that comes in and helps out the pastures from here.
Okay, when you see nearby corn trading a dime higher today, should farmers take a hard look at that? I mean, they're still wanting the corn apparently because there's a premium on the nearby.
Yeah, but then, as soon as you go to September, they dock you again significantly. They already have from May to July, as May went off the board last week. So I think we have to do some real planning on marketing this year, because we may get instances like this where we're a dime to 15 cents higher, and that might be it for the whole week. Now we spend the rest of the week either trading sideways or lower. So I think right now you have to look at what opportunities come available to you and already have those plans and say, if it reaches X point, I'm going to go ahead and make some sales in there, because it looks like, again, as the evolving weather changes, we're going to have a pretty good crop this year. So I think we need to know that the pressure is probably going to be on prices more so. So when we do see rises in them, we want to make sure we take advantage of that.
I guess the point being, given the basis structure and the way things, the lack of carry is built into the market, it really doesn't reward you to hold on to the grain.
Not at all. Not until you get to December of this year, and then from December all the way into next year, they brought back in carry to it.
Okay. So, well, I'm glad you explained that. I appreciate that. Thank you very much. We're going to take a break here. We'll come back and we'll talk livestock next. Okay, we're back with Chris Swift. Now let's open up our livestock trade and see what's going on. We'll take another look now that we've traded for about a half an hour, and here we go. Let's go to the live cattle board with our quotes from bar chart. Chris, we are still seeing pressure, and the pressure is led by the nearby months to the downside. June down half a dollar at 163.87. August down 70 cents at 161.75. Beyond that, we're about 20 to 30 cents to the downside. On the feeder cattle market, well, you have August 35 higher at 229.32. But look at where we were, 230.52. We've come back $1.20 off of that earlier high right at the open there. And yet we're still higher despite the fact that we have corn trading over 10 cents higher right now. That's somewhat impressive here. Now on lean hogs, speaking of impressive, here you go. June up $1.70 at 85.80. And July up $1.77 this morning at 87.10. It seems like lean hogs are trying to make a statement today.
They are, and they have been bottoming. You know, it was a little bottom action the last couple of days last week, and so I think that they're pretty close to it. They really narrowed the basis to the lean hog index. Lean hog index now starting to show a little firmness, so that might give the futures a little bit of room to run.
You know, we had that big key reversal in the lean hogs about a week ago or so, and then just really didn't get much follow through, but it did tend to go sideways in what some would call, it looked like a consolidation type of a trade. And it used to be, the old saying was that sometimes would be indicative of a change in trend. Do you think that's true this time?
I'm not real sure because hogs have still, it's very interesting to see how pork prices have not benefited from the seeming good demand that beef has. So I'm not real sure that we're going to lose the beef demand to pork demand, but I think pork production is down so much now that we're probably reaching levels where we're not going to continue this liquidation in hogs. And maybe with a little bit of good weather and everything, we get some improvements of stuff and we start to see the pork market move a little better.
All right, let's take a look at the live cattle board once again. And I want to ask Chris about this. What do you see giving more ground, the cash cattle market out in the plains or the June futures on the live cattle?
Probably the cash, because the futures have already got that discounted. We were at 170 last week for cash, and here we are at 163 for the June futures. So they've already got a little bit of a discount there to it. But we're probably going to get into a few more animals as we run into the end of May and 1st of June. All this, we're already processing right now for the Memorial Day, Labor Day. No, Memorial. It's Memorial Day weekend is coming, and then Father's Day. So you got a sequence of events that are coming up that will be an elevated slaughter pace for the cattle.
Interesting stuff. All right, so it's a story in the making, I guess you could say, as we get toward the summer. All right, well, Chris Swift with us here this morning. He is with Swift Trading in Nashville. Tammy, with that, I'll turn it back to you.